Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, we're trying to get that market to go higher, right? New record high on the NASDAQ, new record high on the S&P. Dow, they're having trouble pushing it up. That might be a little bit of a warning sign. I think the market is getting ready to top out. I think we're already in a topping out pattern. Now, the market, a lot of euphoria, right? I mean, like in the 1920s, the roaring 20s, as right before the Great Depression. It always happens this way. You get the euphoria, you get the stimulus, you get the printing of money, pushing it all up, or raising the roof, and then they do that rug pull and the market comes tumbling down. Right now we got Nvidia stock. It's carrying the market, right? It's responsible by itself, one stock, for 30% of the gains in the S&P 500. 30% of the gains come from one stock. Nvidia, 10% of the GDP. One stock, one company, 10% of the GDP. Now you got three companies, Nvidia, Microsoft, and Apple, that make up 30% of the GDP. 30%. Believe me, at some point these stocks are going to correct, and when they do, this market's going to come in quite a bit. 35, 40, 50%. Some say as much as 70 or 80%. This does not end well. Look, at the beginning of the year, they were predicting 6 or 7 rate cuts from the Fed. The Fed came out and they've done nothing. Where are we at here? We're approaching July, right? And here we are, 0 rate cuts. Now, we're going to be lucky if we get 1 rate cut this year. And they're just going to do that, because there's an election coming up. There's no reason to cut rates. Inflation is not down. Now, they'll tell you it's down. Numbers are down, right? We're 3.5, 3.4, 3.3. These are their fake made up numbers. We're still up here around 10%. And believe me, inflation goes in waves. And the next wave is going up. And Powell knows this. He's not a complete idiot. He looks like one, but he's not. He knows what's going on. He knows the real inflation's running about 10%, but he knows that he's got to be political also. Says he's not political, but he's got to get that rate cut in before the election. It's probably going to happen, right? All right, let's get over to the real estate market. Now, real estate market's fascinating to me. Always fascinating to me. All right, so the mortgage payment on the average new home, right? Well, it's gone up 81%. 81%. I mean, you talk about no inflation. I mean, housing makes up like 20 to 30% of the CPI, and the mortgage payment has gone up 81% in just 3 years. 3 years ago, the average price mortgage on the average price home, $1,600. What is it today? $2,900. $2,900. Now, granted, this is because rates on mortgages went from that 3%, 2.8% for you, but it's up 7.5% now, right? Okay, that's a big cost. And of course, the cost of the homes, they've gone up, but this is not sustainable. It's coming to an end soon. Now, I think the stock market's coming to an end. I think that's going to be in the next week, maybe a couple weeks you got left in the stock market, but that top is getting really close, in my opinion. This is just my opinion. I can put my opinion out there. People can call me an idiot. That's fine. But I think the stock market's getting ready to top out. I think real estate's getting ready to top out, but you can't pinpoint exactly like the stock market. A lot of places, the top's already been hit. Places like Florida, places like Texas, that top's already been hit. The bubble's coming down. Now, this is the largest bubble in the history of the world. Much larger than the 2008 bubble. 2008 bubble, it crashed 34%. What happened? Well, in 2009, what they do, they started to print stimulus. They started to print money. To be exact, 27 trillion with the T, $27 trillion and counting. We're not done yet. We're not done by a long shot. We're going to get that stimulus going up more and more and more. Now, why do I say that? As soon as things start to come down, they're going to have to print more more and more money. It's printing at a more rapid pace. Right now we're doing $1 trillion every 100 days. Pretty soon we'll be doing $1 trillion every 50 days, then $1 trillion every 20 days, and then $1 trillion every 10 days, and $1 trillion a day. You think this is crazy, Mike? Oh, Mike is crazy. Why would they do such a stupid thing? They don't have a choice. They could let it all fall, but that's not palpable, right? Nobody wants that. Nobody wants to feel the pain, right? They want to print the money, keep this propped up, get the election going. Everything's great, right? Everything's great. Just look at the stock market. They're going to come back in history and they're going to tell you we're already in a recession. They're going to tell you the numbers were all fake. Inflation numbers fake. Unemployment numbers fake. All the numbers that they're feeding you on mainstream media is fake. Okay, so what am I seeing in the housing market? Now, I'm a boots on the ground sort of guy, right? I'm a real estate broker, been a real estate broker most of my life. Well, what am I seeing? Here's what's in my email boxes. Huge price reduction. Get those every day, every day. Huge price reduction. Motivated sellers. Why would a seller be motivated to sell, right? Just stay in. These are going to the moon. But yet the seller's motivated. Maybe he had a divorce. Maybe he had a job relocation. Maybe it's a probate sale like the one I'm working on where someone died and the heirs, they got to sell the house so they can divide. A house is really hard to divide. If you got 5 heirs, the only thing they can do, put it onto the marketplace, and those sellers are motivated. Why are they motivated? Because they have to sell. They have to sell no matter what the market tells them. So those are going onto the marketplace. My favorite is the ones, this starting to see more and more of this. Back on the market. Back on the market, what does that mean? It means that some fool bought it, and that fool realized he can't afford it. So he gets out of the deal. He tells his lender, I don't want it anymore. Just tell him I can't get the loan. And then house falls apart, right? Now the one I'm selling, it's all cash. So they can't use that excuse. But a lot of houses are coming back onto the market. But here's the thing. They're not just coming back on the market. They're coming back on the market with a new price. And that new price isn't higher. New price is much lower. This is just what I'm seeing as boots on the ground. I know my opinion's not popular. I suppose my opinion's popular if you don't own a house. You want houses to come down. Now, if you own a house, you want houses to go up. So it's about 50-50 as far as what people want. Now, most people believe that houses are just going to continue to go up. Now, me and Harry Dent, we believe about 50% crash. He's calling for more than 50. I'm calling for only 40. It's a correction back to the mean, back to the mean. That's what I'm seeing. You see, this is just what's happening. It's going to happen. It always happens. We always revert back to the mean. Okay, all right. So anyways, a lot of people, they're saying, but Mike, this free market capitalism is what's forcing these houses higher. And free market capitalism, it just doesn't work. It's only good for the rich. Let me tell you something. In this country, we are the exact opposite of free market capitalism. We are the exact opposite. We're more a socialistic country than a capitalistic country. We are so far away removed from free market capitalism. Since 2009, we printed $27 trillion. I mean, that's complete insanity, complete lunacy, if you will, printing $27 trillion just so we can make rich people richer, just so we can prop up asset prices, because no one wants to see rich people poor. You don't want to see the rich people poor. We got to keep printing money to keep them getting rich. See, rich people get rich when you print $27 trillion. Why? Because they have the assets. They're the ones holding all the assets, and those assets get to be propped up by $27 trillion. And they're not done printing that yet. They're going to continue to print that. But my point is, since 2009, we haven't had a recession. Technically, we have not, right? Okay, so 2009, we've gone straight up. So all these businesses out there, and a lot of them are zombie businesses, they shouldn't be in business because they don't even bring in enough money to pay off their interest on their debt. They're zombies, right? They don't have the cash flow. They're a bad business model. Well, what do? They go out and borrow money, and that's what low 0% interest rates for 14 years, what that's done. Now, the Fed realizes that, oh my God, we've messed up. up. Well, yeah, they kind of messed up, right? Everything's terrible out there. I'm telling you, man, things are not good. They're going to tell you it's good, but they see their problem. They see what they did. They see how they inflated to where nobody can afford a house. Nobody can afford to live. $27 trillion, but these zombie businesses, that's 20% of the S&P 500 are what's called a zombie company. Over 100 companies of the 500 companies don't even bring in enough cash flow to pay for the interest on their debt, right? These companies should be washed out. And if we ever have a recession, 100 of these companies are going away. 20% of the companies in the United States will be gone, as we know. What does that mean? A lot of job losses. What do job losses do? A lot of people will be dumping their house onto the market when they have no job. Now, nobody knows the exact day this recession's coming, but I don't think it's that far away. Heck, we haven't had one since 2009. Where are we? 2024? 15 years. 15 years is a long time. Matter of fact, I think that's the longest on recorded history. Now, it's coming. I guarantee you it's coming. People in the United States have no clue what's coming to them. It's going to get real ugly. The reserve currency's in a lot of trouble right now. Petrodollar's gone away. People are buying oil and a lot of other currencies, not the dollar. We're sanctioning Russia. We're at war. We're paying for 2 wars, going to be paying for 3 wars. Our currency is just being devalued day after day after day, 25% down just in the last 4 years. This is not going to end well. This is really not going to end well. Here's one that gets to me. Okay, it doesn't get to me. It's just kind of funny, right? Okay, so anyways, let me explain something here. Now, what happens when prices stop going up on houses? Okay, so they've been going up, right? Okay, what happens when they stop going up? Well, you got these people that are called the flippers. Now, if prices do not go up, it's really hard for a flipper, right? Really hard. I mean, he buys it, he puts in, fixes it up, puts money in it, and then he sells it at a loss. Oh, no, that's terrible. That's terrible. And then he does it again. He sells that when I'm not going to do this anymore. See, the flippers go away when prices stop going up. So we stop going up to the moon, right? The moon boys get it wrong and we stop going up. First ones to go away are the flippers. They run for cover. Now, what happens when we start to go down? When we start to go down, who's the first one to exit the market? Believe it or not, it's corporations. Corporations aren't attached to their home. Now, you're attached to your house because your house is worth more than every other house in the area. Why? Because it's your house. You get attached. You're emotional. Corporations not attached. They see it going down. They're going to be dumping the inventory onto the marketplace. They go from a net buyer to a net seller. So this, when it shifts, it's going to shift really quick and really big. Now, back in the 1987 or so, I had 3 or 4 houses out there, and I was a landlord out there, and I was holding them, but I got in financial trouble, and I was trying to get rid of them, right? But I couldn't sell them. Why? Because the herd went away. Now, what's the herd? The herd's the ones that go to all the open houses and bid everything up. Well, they disappeared almost overnight. I couldn't give away a house back then. You're going to see those days come again. They're not that far away. But people freak out when I say prices are going to come down 40%. People say that Tall Mike, he's talking out both sides of his mouth. He's talking about hyperinflation, and he's talking about houses going down. Can a house go down with inflation? Let's just use rough numbers here. Hyperinflation is really 50%, but I'm going to say 20%. Let's say the government, Jerome, comes out and he says that prices have gone up 20%. And what's he going to do? Well, he'd have to raise interest rates, right? Now, he could just wave the white flag and let it go, but he'd probably raise interest rates. So you got your houses here. Now, we got 20% mortgages. 20% mortgages. Is your house going to go up or down with 20% mortgages? See, people don't understand that houses, they're a debt asset. And when people have to get a mortgage to buy a house, now, a lot of people are not going to be able to get a mortgage at 20%. Now, nobody's bank is going to be giving mortgages away, period. They're going to get out of the business. So it's going to have to be the government. Now, maybe the government will give you a loan at 2.8% to create more inflation so the 20% can go to 50%. But the only reason houses are up here is because they're being subsidized by the government. You take away the government, you're going to have a free fall in these houses. You're going to have just 40%. That'd be really conservative. I'd say more like 75%. If you made a free market out of it and took the government away, had them sell the $3 trillion in mortgages they have on their books, have have them take away the Fannie and Freddie Mac guarantees of mortgages, you're going to see it free fall so fast. But my point is you can have a crash in houses when everything else is going up. Why? Because mortgage rates go up, because people can't get a mortgage, because then you only have cash buyers, and everybody knows that cash buyer is going to pay you 30 to 40% less for your house. Now, yeah, the cost of bread's going to be $25 a loaf. You're going to be paying $20, $30 a gallon for gasoline. You're going to be paying your utility bills are going to be off the charts. Your property taxes off the charts. Your HOA fees off the charts. But houses themselves are going to be coming down because there's no buyers. Now, how can it be possible, Mike, that the houses would come down when there's no sellers? Look at, let's say you have just one person that has to sell and there's no buyers. There's zero buyers. What happens to the market? Gets cut in 30% overnight, then 50%. Now you're saying, but Mike, not my house. My house is worth more than everybody else's house. It doesn't matter what the next door neighbor sold for. If he sold for, $700,000, mine's still worth $1 million, even though I have the same floor plan, even though everything's exactly the same. My house is still worth $1 million because it's my house. Just because he had to sell, that didn't bring my house down. Then the neighbor on the other side, he sells for $500,000. But Mike, I'm still worth $1 million. Maybe you are, but that's $700,000 comp. That's a $500,000 comp. Now maybe you can find some idiot with cash to come and give you the $1 million. I don't think you'll be able to, but maybe if you lower your price down to $400,000, you'll squeak out in time before it drops even farther. You see, once the death cycle starts, it doesn't stop. And I'm telling you, once you hyperinflate, you're going to have houses not going with it. Right now, you got inflation running 10% and you got houses flat. What does that mean? That means in real terms, your house has come down 10% a year for the last 2 years. Your house dropped 20% and you didn't even know because the media is telling you that, hey, houses are going up. No, they're not. In real terms, they're coming down. They're coming down pretty hard. And I keep talking about gold and silver. You want to get some. You see gold and silver, 500 ounces of silver, you'll be able to trade that for a house. That's my take. I could be wrong. I don't mind owning the 500 ounces of silver anyways. But I think there's going to come a time when that real money is going to get real valuable. Weimar Germany, where they hyperinflated, right? You could take 25 ounces of gold and you could go buy a city block. It was about a half an ounce of gold for each home, right? Okay, things got really cheap compared to real money. You see, it's a lot different. In real money, houses are going to crash in hyperinflation, but they can even crash in nominal terms in hyperinflation because people don't have the money. They have to sell. There's no mortgages to buy them with because the banks got out of the business. You can't get a mortgage. You got to be all cash. So the value of property in nominal terms has come down. This is just my take. You may think that hyperinflation is going to make your house go up to 100 million. And maybe it will, but maybe an ounce of gold worth 200 million at that point. And you get my take. There's a lot of ways. Nobody knows exactly how this is going to play out. I know I don't. I'm just the dumb realtor. Anyways, if you like this stuff, give me the thumbs up. Why not? I'm Tall Mike. Get out there, everybody. Enjoy the day. Bye-bye.